Just on Tuesday, January 28th, 2025. Let's do the full recap here inside the service tonight. So much of days like today in the market comes down to, do you believe this is, screaming buy bottom? I do not, obviously. If you do, then a lot of those folks were loading up the truck and, really piling on the longs. Uh, my view obviously is different. I believe yesterday was a significant shot across the bow, and there's more coming. And today was kind of a bounce back in front of maybe a short-term relief rally in front of the Fed tomorrow afternoon, 2 p.m. Eastern, when the fireworks start. I believe they're expected to hold steady. We'll see what Powell's rhetoric is at the press conference, especially. Will he acquiesce to President Trump's demands for lower rates at the March meeting, perhaps, or is he going to, kind of push back a little bit? That'll be the key issue there. And then, of course, earnings. Tonight we had Starbucks. They beat, with their new CEO, who everyone loves, they beat revised lower earnings. So they're up a little bit. I don't think it's too impressive, quite frankly. I wouldn't be surprised if they sell that. Tomorrow morning, ASML, a chip, and then really tomorrow evening after the Fed. This is when we get into the monsters: Tesla, Meta, Microsoft, Thursday, Apple. Plenty of other names as well, obviously, that are of significance. But this is kind of the way things are set up. So what I wanted to do is start off with NVIDIA. Look at the sheer size. And again, this is a daily chart, so each candle is 1 day in the life of the market. Daily chart, daily candle. Candle represents the day. We were all the way down this morning at 116.25, and we close basically at 129, the highs. That is an enormous price range for one singular day. And we saw the same thing yesterday. For a stock of this size, again, 3.5 trillion, give or take, market cap, that is enormous. And these moves, again, to me, are not to be taken lightly. And I understand we've seen historical momentum higher. Every dip is bought. It's a meme. It's a colloquialism. People just casually say it. Oh, buy the dip, buy every dip. We go, quote unquote, up only. The market only goes up. Quote unquote, they will never let the market drop. I mean, look, perhaps it's to my detriment that I've studied market history, not just U.S. markets, but world markets for hundreds of years and whatnot. Because the reason why I say that is because each time people have said that throughout history, it would almost always happen right before a major hard correction, with volatility spiking up and leading to culminating in palpable fear on the other side. So that's why I remain skeptical. But what do these price ranges indicate? What's the inference to draw, if any? When you see massive price ranges, especially, again, after quarters on end of nonstop up only, quote unquote, for a premier marquee name like NVIDIA, especially, it typically denotes what's really happening is a loud disagreements taking place between buyers and sellers. Imagine Grumpy Old Men, like that old movie with Jack Lemmon and Walter Matthau, right? Grumpy old men. One of them is a buyer, one of them is a seller. One of them saying, no, this price is too high. No, this price is too low. Get off my lawn, this and that. That's really what's taking place. There's not just a disagreement, which always takes place on Wall Street, but violent disagreement, right? It's nasty. It's intense. And the reason why it often leads to a major change in trend, here it'd be from bullish to bearish, is because for so long, the bulls have been winning the battle. Everything has been their way by their rules. Even when we get little shakeouts, they've been gobbled up. What now, right? Well, obviously, look, NVIDIA doesn't report until late February. So there's some time there. But I do think it's a microcosm of what we're dealing with here with these markets, with tech. So the NASDAQ did bounce back today, the Qs, but again, it's happening in front of earnings tomorrow. So Meta sure is showing no fear. Tesla's right at the 50-day, but yeah, Meta, no fear at all in front of earnings. Microsoft bouncing back. Apple finally getting a bid. The chips up nowhere close to the amount NVIDIA was up today. Interesting, right? And then SMCI red. To me, I've had this as a short idea, and my view is accounting issues are not to be taken lightly, especially when the chart has these kind of quick rallies which don't amount to anything. If you'll notice, and this is a hardware AI play, but in addition, they've had serious accounting issues. Ernst & Young walked away from them over that. They really haven't put out a convincing counter argument other than, I think, a singular board member saying, hey, everything's fine, guys. Obviously, I don't buy that. It's below the declining 200-day moving average. These rallies have not held. In this kind of market environment, especially over the last couple of years, do you not think bulls would have a field day if they were correct here and shorts were out of line? Think about it. If shorts were really out of line, and in this kind of market environment, we just had Janet Yellen as a Treasury Secretary who went out of her way to offset when the Fed was raising rates in 2022 by injecting liquidity into the system. Since then, I mean, do you not think SMCI would have tripled or quadrupled by now? Squeezed into the sky. That didn't happen. And now look at the risk of a breakdown. It wouldn't. I still think SMCI could be headed for single digits. So I wanted to clarify that. Small caps on today, look at that anemic bounce. Again, interesting. See, when you see an anemic bounce like that in the smalls and then the NASDAQ's roaring back, to me, that says yesterday, off of yesterday's hard sell-off, today was kind of a relief rally. They call it a dead cat bounce, if you will, a rally destined to fail because the real sick part of the market of yesterday, a snapback initially. The question is, does it follow through? Well, look, we'll see what Powell has to say tomorrow. Look at the volume today. For what it's worth, weaker than yesterday. So again, there wasn't really much, I would say, for me that I wanted to do today in front of the Fed, in front of the big earnings. Rates on the 10-year just kind of trying to stabilize. Watch it back over 46 or 4.6%. I still am eyeballing gold miners for a long. NUGT would be a good vehicle. Let's see it back over 38 on the GDX. Held the 200-day moving average. Gold bullion, very, very strong action overall. And silver holding the 200-day. Natty gas. Oil, still kind of corrective, still dipping. That's fine. They've had great runs since December. What I just want to see things stay relatively calm. I mean, these are commodities. You're always going to get nasty stuff, and it's not pleasant riding it down. So let's see when RRC, Antero, I'm happy to see them correct. You know that. I don't mind that at all. Pardon me, CRK, Comstock. The question is, do they firm up sooner than later, or do things spiral out of control later? That's obviously the issue. Okay, within the transports, I mentioned the airlines and the jets, JETS, have been riding unbelievably high. This rally is absurd since last August. Member Ephraim noted, good job, Ephraim. JetBlue got clocked, I think, after earnings. Oh, it is earnings. You can see I highlighted it, 42 cents a share. My charting software annotates the chart now. That obviously is a nasty move. The ETF looks ripe to come in. I do like buying puts on it if that's your cup of tea. American Airlines, AO looks like a bear flag. I like buying puts on that. I think these airlines, quite frankly, are just sitting ducks. I think they're ripe to come in, the ETF, and JetBlue to me is kind of a symptom of that. We saw, United, I think it was American that got whacked, on earnings last week. So I think they're just ripe for the taking on the move down. Now, again, obviously I understand. We're kind of beholden to what the Fed does and says tomorrow. You can see here's the interesting part. The VIX came in today. I know it was up big yesterday. Didn't close at the highs yesterday. That screams to me there's just no fear out there. I think there's complacency. I really do. Walking into terrible seasonality. We talked about this at length. We'll talk about it again over the weekend because February is coming up next week. February in a post-election year where the incumbent party loses, as is the case. Terrible seasonality. Very bearish. And then again, the Fed, that's a wild card. The pushback with Trump, earnings coming up. I know Netflix beat and rally, but that still, to me, it could be ripe for a gap fill below. And especially, and again, look at Meta. No fear to rally this darn thing into earnings after this magnitude of a rally. I mean, you got to be kidding me. That is, to me, certainly not fear. Okay. Now, we can argue different levels of complacency. Some people think Meta with Zuckerberg will just keep delivering the goods. And you know what? Maybe. But to me, definitely not fearful. I mean, look at Palantir yesterday, bounce back today. They got earnings next week. So, look, bulls certainly are not giving up without a fight. The question is, though, will they continue to be rewarded, or are we running into diminishing returns, as I suspect? A lot is at stake here, many, many trillions, in fact. Doesn't get any higher stakes than this as we head into the belly of the beast. Earnings, Fed, February. Okay, have a good evening, folks.